Hey there, welcome back to the Know Your Business Numbers series. Today we're going to talk about how to calculate your gross margin percentage because you need to know how much you are making on all of your products and services as well as your overall business. So the first thing is, what is gross margin? Well, gross margin is the percentage of each dollar that you make after you take away your costs of goods. So once the cost of goods are deducted, that's going to give you what your profit is, in which case, in our example here, $100 minus $25 cost of goods is going to give us a $75 profit, which then equates into a 75% gross margin. But more on that, on how we came up with that number here in a moment. So the first thing to understand is, why is a gross margin even important? Well, it sets the initial bar for what profit you're going to be making in your business. For example, if you sell something for $100 and it costs $100 to produce, you're not making any money, in which case you really have no business. So knowing the gross margin is very important, because I'm going to assume that you want to make some money and put some in your pocket. So you need to know what amount of money you have the potential to make, and that's where gross margin comes in handy. Now, there is a difference between gross profit versus gross margin. It's a different way of expressing both things, but in most cases, we're always talking about percentages. So the gross profit is going to be the dollar amount of profit you make. So using the example from earlier, $100 minus $25 meant we had a $75 profit. And we already figured out that the gross margin on that was going to be the 75%. Now, it's very important that you remember your gross margin or gross profit, whichever way you want to talk, they are not the final profit. They're not the final amount that you put in your pocket, because after that, you do have your expenses and everything. So the reason that it's important on your gross margin is because that gives us a starting point for making our profits. Now, you might recall that everything is a percent to sale on your profit and loss statement. We had a video earlier. If you haven't watched it yet, go back and see that. It's in the series. But profit and loss statement, everything is based off of our percentage of sales. So because your sales can fluctuate, so can the percentages. So instead of using dollars, we typically use percentage amount because it's the best way to calculate what you need to be able to do in sales to hit any targets that you have. And we'll continue to explore on this in this video and in others. But just know that it is very important. Now let's take a look at an example of a product or service. Let's just say it sells for $75 and the cost of goods to make it is $30, which means we now have a gross profit of $45. Once again, this is before expenses. This means that our gross margin is 60%. Now you noticed in our earlier examples, it looked pretty easy. It was because we were basing it off of $100. That's an easy way to calculate it. It's not so easy when the numbers aren't based off of $1 or $100. So we're going to take a look at this one to show you how to do those numbers, to how to calculate it out, since most of us don't have it. So in this particular case, we can tell that 60 cents out of each dollar is potential profit. That's why it says 60%. So when you think of the percentage, just think of the fact that just convert it into cents, and it tells you 60 cents of every dollar is potential profit. Now, let's try to figure out how we even got to that 60% using those same numbers, shall we? Well, it really is a simple calculation. Basically, to figure out your gross margin percentage, you're going to take the amount of profit you made and divide it by your sales. So in this case, we know that we have $45 in profit that we made, and we're going to divide it by the $75 that we sold it for. And when we divide the 45 by the 75, we get the 60% number that we had earlier. Now, by the way, you can also do this not only by each of the products that you sell. I also recommend that you do it for your entire company, and I'm going to explain why in a minute. So let's just take the same business and let's look at it from a bigger scale. They do sales of $160,000. Their cost of goods for the year were $70,000, which means they had a gross profit of $90,000. So based off of that, what was their gross margin before their expenses and before anything else? Well, let's figure it out using our calculation of profit divided by sales to come up with that gross margin. In this case, we're going to take the $90,000 of gross profit and divide it by the sales of $160,000, and we discover that they made 56.25% gross margin. So their business's gross margin is 56.25. Now you're going to notice here on the company gross margin, it was 56. We're just going to round up for our numbers. And that product we did earlier for them came to 60%, which means that the difference was 4%. So the product was actually 4% higher than the company's number. And that's a good thing because it's important that you know how each product or service feeds into your business's overall gross margin. Because if you want to hit your target, you've got to be in the same area. So in this case, if our product's gross margin is 60% and the company's is 56%, this particular product adds value to that company and pulling that number up. So more than likely, this company has other products or services that are way below the 56% to offset that. So it's one way where you can dive into your numbers deeper and say, okay, who's above that company gross margin and who's below that company's gross margin. And then you can see why you end up where you are when you're looking at individual products or services. So it's a really fun thing to do. And I highly recommend that each of you guys go out there and you figure out not only your company's business gross margin, but you also figure out the individual gross margins on each product or service. Go ahead and go back through the video in the calculation section and do this yourself in your own business. Now, if you want to learn more about your numbers, go to knowyournumberscourse.com. I believe there's also a link in the show notes or the notes below the video. And we're going to take a deeper dive into learning and understanding all of your numbers and the different reports that are important for you to know in order for you to grow your business, but more importantly, to start earning more profit immediately, because that's our main goal. And if you like this video and you want even more videos, don't forget to hit subscribe down below and join the YouTube channel. And don't forget to the local Small Business Coach podcast. You can listen on your favorite apps. They also come here in the YouTube. You can do the audio here on YouTube as well, because each of the episodes do come here, so you can listen there as well. And get out there and be the badass that I know you are. See you on the next video.